All right, Thursday morning, folks, and these markets are fired up. It's been a wild ride the past 36 hours. Take a look at what happened yesterday. We talked about the Federal Reserve minutes from the last FOMC meeting that were coming out yesterday. Those did, in fact, come out, and basically what it gave the market was some intelligence around where their head's at, and the fact that in that meeting they discussed that it's very likely they just need to start moving faster to get in front of inflation, meaning higher rates, meaning a quicker end to the bond buying program. That gave, that put, I should say, markets under an extreme amount of pressure. We saw the Dow Jones in the day down 1%, S&P's in the day down nearly 2%, and the Nasdaq tech stocks in the day down more than 3%. So a lot of pressure on the back of that announcement. We talked about that earlier in the week. Yes, we're coming off the back of the holiday. Yes, volumes are still light, but there's a lot of economic data risk out this week that could shake these markets up. Anything related to inflation, anything related to COVID could get these markets moving, and that's just what happened. So it goes to show you've got to be ready. Now, we've got one more massive number due out tomorrow in the non-farm payrolls report due out tomorrow morning. And the expectation there is over 400,000 jobs created. For those of you trading event contracts at Nadex, you can still go make your prediction on the unemployment rate and non-farm payroll today. Looking at the markets heading into the open, though, we're seeing a bit of a bounce back from the weakness yesterday. Equities are trading higher with the exception of the Nasdaq. We're seeing oil just shy of $80 a barrel, up 2% this morning, and we're seeing the dollar rally. Dollar strength, weakness in the pound, weakness in the euro, weakness in the yen. All right, folks, let's go get some. Have a great day. I'll see you again tomorrow.